Hello everyone. In our latest update for 2023, there's some encouragement as inflation turns a corner and the economy proves more resilient than first thought at the start of the year. Today, I'll run through a macro overview of market conditions. Farhed will cover construction output and the latest in construction material trends, whilst Davinder investigates the labour market and how to mitigate against the risk of insolvencies within the supply chain. Now let's dive into the macro overview. In Q2, the UK's economy did better than expected, with GDP growing 0.2%. Although growth is slow, the Bank of England believes the UK will avoid a recession this year. However, with headline inflation still high at 6.8%, challenges remain ahead. The market expects further rises in interest rates. Although we see this as the fine-tuning, it will keep borrowing costs elevated in the short to medium term.
This quarter, construction output in the UK grew by 0.3%, hitting another quarterly high of £46.4 billion. However, new orders have now fallen for 3 consecutive quarters, dropping by 7% and falling below the 5-year quarterly average. This is a result of several factors, including ongoing challenges of high interest rates, elevated construction costs, and an uncertain economic outlook. On the other hand, we anticipate the contraction to be much smaller than in previous downturns. Materials were the main driver for construction cost inflation in 2022. However, falling wholesale energy prices and improvements to product availability have helped soften these price increases. In a significant change to previous update, the All Work Index from the Department of Business, Energy and Industrial Strategy showed a reduction of 2% in comparison to June last year, which is the first annual contraction since September 2020. Nevertheless, energy price movements are still volatile and remain a significant risk to material prices for the remainder of the year.
Labour continues to be the key cost driver in 2023. Construction vacancies are down from the historic highs following an easing in construction activity, and the availability of skilled workers is contracting, contributing to the rise in weekly average earnings. With the impact of Brexit and the war in Ukraine and its ongoing effect on the European labour supply, this trend is one to watch. Another growing trend we've seen this quarter is the increase in supply chain insolvencies. Bayes data reports 471 construction firms in the UK went out of business in May 2023, which is 34% higher than last year. To mitigate against these risks, we advise involving contractors and suppliers early, providing greater visibility of project pipelines to create time for adjusting resources to suit demand, and taking a collaborative approach to how project risk is shared to keep the supply chain robust.
So our key takeaways for this quarter are: firstly, input price inflation is turning a corner, creating encouragement throughout the industry. Secondly, labour is the key cost driver as availability issues meet cost of living pressures. And lastly, to protect current and future project pipelines, be mindful of potential supply chain insolvencies and put measures in place to mitigate this risk. So although challenges remain, construction cost pressures are stabilising, and some parts of the UK construction sector have gained momentum, making this a positive time to progress with your future pipeline. Remember, the market is constantly evolving, so stay tuned for our future updates, where we'll continue to keep you informed about the latest forecasts.
To find out the details behind the headlines, visit G&T's Market Intelligence microsite and get in touch with our experts today.